We've got Andy's decorative bathtub. Okay, Andy's decorative bathtub with this big old faucet of 3 types of dollar bills coming into it, filling it up. You got the visual, it's being filled with money. We're stacking cash. There's 5 drains of our wealth coming out of that bucket. Okay, and this is on the expense side. Okay, number one drain for everybody's bathtub, including myself, will be, anybody want to guess?
Taxes.
That's the first thing that I thought too. That's actually number 2. I'm gonna get the cat out of the bag early on number 2 is taxes. Number 1 is ignorance. Number 1 is going to the marketplace with that bag of money and having no advantages and being taken advantage of. Or buying real estate because everybody else is buying real estate and not understanding how to time the real estate market and how to have bought right. You guys with me? How do I know this? I'll tell on myself. Before I had any education in real estate, I was a auto repair shop owner, stacking cash, time to buy a house. I bought my house. It was $300,000. It was worth $300,000 less 4 years later. I still lived in that house. I never surrendered it. Thank goodness I was able to refinance out of it just before all the debacle took place. I wasn't happy with the situation, but I didn't lose my home. But it's because I had no advantages in the marketplace. I didn't know the market was about to crash. But all my mentors of today knew it was about to crash because they still talk about it. I've watched their seminars that were going on, videos of their seminars that were going on just when I bought my house. 4 years later, I watched their seminars and realized these guys knew what was going on. I had no clue, right? So ignorance. Taking your bag of money and putting it into an oil investment that you have no advantages of. Somebody's a good friend who seems very educated in the area of investments, and he said, man, Brad, you got to invest in this, man. You got to. It's a sure thing. And I have no advantages. It's not on my asset allocation sheet. I don't have this as an option. I don't even have it with my gambling money, right? What I call my gambling money, things that I can put money in and possibly lose. And I put all my eggs in that basket, and my ignorance takes that money away, right? So number 2 on expenses is taxes. And tax drag specifically, because the biggest deterrent from us to grow is going to grow our net worth is tax drag. Okay, and that's the reason, going back to what I talked about a few minutes ago, that's the reason for the strategy sessions at least once a quarter for business owners, guys, at least once a quarter. And hey, this is all, you could take all of this, take your piece of paper after the meeting and throw it in the trash, and it's not going to hurt my feelings, but this is a community of change. And I just want to encourage you that this is very important stuff. Quadrant 2 stuff, however, which, as we all know, is important, but not what? It's not urgent. It's not urgent. It's not a ringing telephone or a crying baby. It's going to be on December 31st when you get a $350,000 projected tax bill. And guess what? It's too late to do anything with your tax bill, right? Now is the time to plan for that tax bill. Not to mention and this is very important, wealth compounded is what creates new wealth, right? So if you are continually paying too much in taxes, your nest egg, your bag of money is not growing. It's not compounding the way that it should. The 8th wonder of the world is compound interest, right? Compound wealth. If I'm making a 6% return, just picking a number from the sky, that's a respectable return for average investors. It's not for me. It's not for a lot of people I know, but that would be a good return, wouldn't it? If I'm getting 6% of 500,000, 6% of 600,000, 6%, but if my number continues to stay the same, I'm still getting the same 6%. I'm not compounding my wealth. Expense number 3. One more thing I want to talk about that. Remember we talked about the different, I just touched on it. So I don't want to go deep on it today, but the different types of income are taxed differently. We all should know what our income looks like on the tax side. I'm amazed how many business owners that are taking way too much money on a W-2 paycheck because their CPA gives them bad advice. Way too much money. I've seen people taking $120,000 a year because that's what their CPA or bookkeeper told them when they should be in the $60,000 range, literally double. Because the contribution that they give at this stage of their career is in marketing, coaching, and leadership. It's not $120,000 I'm at the front counter making my shop happen every day. Does that make sense? So evaluate that and reevaluate that over and over again, and make sure, because the whole goal is, okay, I'm gonna have some income that's at 40% because my rentals are at 40%. So I've got to have some other income that's down at 20%. So my blended rate, called a blended tax rate, if you've never written that down, I just want to encourage your blended tax rate. How do you figure out your blended tax rate? I'll tell you. Take the number you paid last year in taxes, or the last year you did in income taxes, just whatever you wrote the check for both state, you can do it separately, but if you've got a state tax, you add the two together, state and fed, and divide it by what you reported your income, that's your blended tax rate. And if you're too high on that number, you need to have a heart-to-heart with your CPA, or just go back to what I teach in my book, and that is you will outgrow your advisors from time to time. And if your advisors wants to stay so far on the side on the side of the line to be conservative, I don't ever want to do anything fraudulent. I don't ever want to get audited. I never have been. But I'm right up to my rights as a United States taxpayer. I'm right up to the line. I'm on the safe side of the line, but I'm not so far conservative that I'm willing to pay another $100,000 a year. I don't mind paying, I want to be perfectly clear, I don't mind paying taxes. I think we need aircraft carriers. I think we need them. I just want to buy my one. I don't want to buy yours too. Is that okay? Is that okay? Yeah, it is okay. Okay. So tax drag is a big stealer of wealth. Every dollar I save, every percent, 1 or 2 points I save in taxes, it's 1 or 2% that I'm adding to my net worth with no more risk. Not 1 iota more of risk. I can't stress that enough, guys. I encourage you to Google 2022 tax rates. Google it and print the document, hang it on your wall, and start looking at where your income sources come from and what level they're going to be taxed at. And try to move as much as you can to the lower tax rates. Sometimes that's controllable, sometimes it's not. I happen to use, in the world of real estate, we use cost segregation, also known as accelerated depreciation. I'm allowed to use that towards a number of different incomes. And so that helps with the tax bill quite a bit. I had somebody call me and tell me that they were paying a lot of money in taxes this year. They told me the number. And I started laughing because it happens to be a bad year to talk to me about paying a lot of taxes. I'm paying a lot of taxes for having sold my businesses last year. Yep. So I've gotten very good at just defending that as much as possible. Cost of living is expense number 3, your lifestyle. Your lifestyle. The vitality number that you come up with, the independence and freedom number you come up with. That also will steal from your wealth. Remember, we're talking about a bathtub. We're talking about the drains on the bathtub. Big, huge drain, ignorance. A little bit smaller drain, taxes. A little bit smaller cost of living. I'm not telling anybody, there's a book called, I think it's called, I forget the name of the book actually, but he has a phrase in it called the latte factor. And the latte factor essentially says, look, it's kind of like the millionaire next door theory, right? If we live within our means or well below our means, we're going to create wealth and become a millionaire. Your neighbor doesn't even know you're a millionaire. Look, and the latte factor says, cut out the lattes, cut out the $3.50, $5 coffees. You know what? I don't want to cut out the lattes. I'm with you. I don't want to cut out the lattes. I work my butt off. I want to enjoy the fruits of my labor because I could get hit by a bus tomorrow. But every one of us has lines that, and really the whole idea is to have values. See, I have values that tell me what lines I shouldn't cross, right? And I think everybody on this call has values that tells them what lines they need not cross in order to enjoy the fruits of their labor. Does that make sense, guys? Yes? So live within your values. Not just, don't live within your means, live within your values, right? Number 4, and this is probably going to move higher up the list, guys. Number 4 is compounded investment costs, also known as fee drag. Fee drag. That's going to be your advisor that's handling your bag of money. That's going to be your advisors that are telling you your attorneys, your wealth managers, all of those. If you're in and out of investments, you're yanking things, moving things around. That's, you're paying, you pull something out of the stock market, you immediately have to pay capital gains taxes on that. Even if you immediately reinvest it into another fund, all those take away from wealth, right? So you want to think about taxes when you think about moving things around. Does that make sense? Yes? Okay. And then number 5, which I think is going to move higher up, is inflation, guys. Inflation is eroding our wealth all the time. So we've got ignorance, big hole in the bathtub, taxes, a little bit smaller hole, cost of living, life, which is our lifestyle, compound investment costs, and inflation. Those are the drains. Those are the big drains out of our bathtub.